Is it safe to get back into the crypto waters? That's the question that I'm asking today. This young woman is descending down the ladder into the market or the large ocean before her. Now she knows that there's risk in there, but it's risk that she was willing to take. But she's not willing to take it if the minute that she steps into the water, there's a great white shark right there getting ready to chomp down on her. And here's the question that I'm asking today. We are just a handful of days away from the halving event. We've done something the market has never done with Bitcoin before, and that's to make a new all-time high before the halving event. Now the question is that when we get there, are we in a situation that right beneath the surface of this incredible move is the point in time in which we're going to see a sea of red, bloody candles emerge because we stepped in at the wrong time. We all want to take risk positions, but we don't want to take foolish positions. Because of that, I've spent a considerable amount of time studying the Bitcoin chart because I've got money in the market. I've got money in trades. And the fact that we've broken up on Bitcoin and are moving higher, that's very exciting. But I want to make sure it's not a fake out so that I don't get took out by getting in at the wrong moment. So we're going to look at the charts together. It's going to be a simple and concise and quick video today, and largely just focusing on Bitcoin overall, but it affects every single one of our crypto trades. And I'm going to attempt to give you a prediction or my opinion, which is very speculative as to what I think most likely will happen. Now, I don't have to do that. I could just kind of show you the facts and leave it to you at the end of the video to decide what you think makes the most sense. But I'm going to share the facts with you, and I'm going to give you guys my opinion as to how I think the situation is going to lean. But of course, it's just my opinion. It's not a suggestion for you to buy, sell, or hold. And this is the Stocks with Josh show, and I appreciate you guys joining me today. I hope you guys had a wonderful weekend. As always, guys, thank you for the likes. Thank you for just saying hi and throwing a heart in the comment. Hit the subscribe to keep getting these types of market analysis and predictions about stock and crypto. So, as I said a moment ago, this crypto cycle is absolutely different. We've never had an all-time high before the halving event. We've also seen that we've not had much of an alt season. We know that it's because that the SEC has put a lot of lawsuits out there. They're suing Coinbase, they're suing Binance, they're suing all the major players and all the major altcoins. And as a result, there hasn't really been the alt season that a lot of us are expecting. A lot of the newer coins, but specifically the meme coins, have been what's been running with Bitcoin so far. Now, if we do have a pullback on Bitcoin, the big question is that would normally lead to some sort of an alt season, but are we going to get it with this SEC cloud of lawsuit lingering over all of these legacy coins and these new altcoins? Even projects like Near Protocol, which have been out for a while, they're on the SEC's target or hit list. And so things are different in crypto this year. But surprisingly, we still see the fact that if we go back in the charts, the overall structure of how things are progressing is exactly the same. They're just progressing on a different time schedule. They're moving faster. Now, there's been an ongoing conversation about how high Bitcoin will get. And if you understand the reference that I've given to the potential that we may only see an $80,000 Bitcoin this bull cycle, the reason that argument has been put out, and I've discussed it quite a bit on this page, is because Bitcoin is becoming a mature asset, and overall the momentum to the upside is clearly slowing. You say, well, how do we know that, Josh? You just told us it went on a parabolic move and it's at a higher price than it's ever been before. But that's true. That's price action, but there are more than one component to charting. You've got price action, you've got volume, and you've got momentum. And you can go higher in price, but you can go at a slower rate with less momentum and less buyers. And for a fact, with all of the new adoption with BlackRock and State Street and ARK Invest and everybody and all the buzz and Michael Saylor buying more at near 70K, the fact is we have lower volume on Bitcoin and we have slower overall momentum than we've had in the past. And so this has caused a lot of people to believe that we could potentially, this particular cycle, get a triple top. Triple top would be the move up to 64, 69, and some have estimated that the next mark on the chart would be right beneath 80K. Now, that's not the prediction that I'm making today, okay? The fact is that is a more bearish prediction, and we're getting pretty darn close to it. Now here's my concern. I'm just going to jump right ahead before I even show you a single chart and tell you what the immediate charts are kind of pointing to. The immediate charts and the last 3-week candles that I study, they all look very bullish, okay? And so it seems to be picking up steam as we move towards the halving. And so it would not at all surprise me if we had a powerful, powerful move this week or the next week, pushed up to that 80K, and at that point, cooled off a little bit. Because you have to realize that a ton of new momentum and a ton of new volume would have to flood in right then and there for us to have the type of parabolic move that we had previously had in past halving events. So kind of what I'm telling you is that the momentum move that Bitcoin normally has, it normally has after the halving, it's already had. Now, has it had it to the exact extent that we could expect it to be had? No, there's actually a little bit more room for Bitcoin to go higher. And the question that I'm going to really try to solve today is, will it accomplish that before the halving, before the 20th of April? Will it get that little bit of additional growth out, or will it wait for the halving and have a much bigger pullback only to later on rebuild momentum to get back up to 80K? Those are the questions we're going to try to sort through, and I've got a couple lessons that we could possibly learn by looking at the charts. Okay, so just so that you can visualize the concern that a lot of people have, I've drawn this line of resistance at our tops, and I've drawn a line of support down at our lows. You can see that back here in time, we have these candles touching and respecting my support line, touching and respecting my support line, and actually this indecision candle is actually showing that this support line was important to the story of Bitcoin, because it was right here that Bitcoin, the bulls and the bears fought it out, and after the bulls won, we got this massive candle move up, right? Followed by a slightly weaker but very strong bullish green monthly candle to get mostly to this area that some people are concerned is going to be resistance. And here's the question I'm just wanting us to visualize today. Is the shark right here? Okay, so as we take positions over the course of the next couple weeks before we get to the halving, is there a resistance shark that's ready to consume all of the upward momentum with selling and giving us a strong rejection candle and a much bigger move back? That's what we're trying to assess today. All right, this is a chart that I've never showed you guys before. It's actually called the Bitcoin Bullish Percent Index. And I really love to keep technical simple. And here's what I want to point out to you guys. This really keeps track of the momentum of moves and the type of volume increase moves that occur over the course of Bitcoin coming out of the winter, so out of a downturn in momentum, sort of a selling momentum, into a bullish upward momentum, right? Typically gives you these 3 candles. When it breaks over this 0% mark, it's actually like a 50% mark, similar to the RSI. It has, the minute that this turns green, that's really your buy signal. So if you are following this chart religiously back in the previous cycle in 2020, you would have bought right here, right before the halving event, and you would have owned it at below 10K, and you would have been selling it. You actually wouldn't have sold it until you got to this candle right here, and you would have been selling it around $60,000, and that, would have been a massive, multiple X win right there. Of course, you would have sold the minute that we got this first red month, and we would have had these 3 red arrows warning of the fact that momentum was beginning to slow, and the minute that this line turned red, you would not have been buying. You only begin to buy when you get the print of these blue arrows, right? That's when you begin to steadily increase your buys, and it makes its biggest move once it crosses over the 50% mark here. Now here's what I want you guys to understand. This thing flattens out at around an 87% on this chart. Now where are we sitting right now? Well, we're sitting at 85%. So I want you to view it this way. This was the previous top of Bitcoin. And when we got into the top, we never saw greater momentum than 80 8% as a general rule. And here we are sitting at 86%, okay? We're just below the peak of momentum seen in the previous cycle, which means that we've already made as much of a momentum move as Bitcoin would typically expect. We've already made that, and we're only a few percentage points below max. Where are we at? Well, we're a little distance between where the current price is and the spot where a lot of people believe the top of Bitcoin could be. And so it could be argued that comparatively, this moment in time was an early version of this moment, and this moment in time is sort of an early version of right here. And that this is where we're at. We're near the top of the momentum move. But if we get to the max level of momentum that we've seen in previous cycles and we're only at 80K, what exactly is the argument that we're going to get the same amount of momentum that we just already received and go significantly higher in the charts? I want you guys to view these as rockets. What's putting more fuel into the rocket ship? There's a certain amount of fuel that's needed to get it off the ground and up into space, right? And at that point, a spaceship will drop its fuel canisters, and then the actual ship itself sort of takes off with less energy and goes further, right? And so what I'm talking about right now is the momentum story. The momentum that we've gotten is equal to the momentum that we've gotten in the past by a handful of percentage points. And when we get that, the final a bit of those percentage points, is it very possible that at that point, we might see a retracement? Now, I've alluded in this video to the macro environment, and the fact is that the market overall has been going up for a long period of time, and it doesn't mean that the market won't continue to go up, but one of the things that we could expect after the big move that we've already had for the first handful of months this year is choppy waters. If we get bad news this week, the macro condition seems more concerning to the market makers than a lot of them have accounted for thus far. We can simply see some sell-off. And what that would do, if Bitcoin came under pressure and sold off, if it spiked up to that 80, we got the full amount of percentage at 88% of momentum, and we sold off, then it could be in a sideways downward move for a number of months, and we still have a year ahead of us in which Bitcoin could potentially rebuild momentum and move up later. So my prediction at the moment, all that I can see or all that makes sense to me right now is that this has wanted to make the move before the halving, right? And it wouldn't shock me if we got to all-time highs before the halving, if we actually got to the high before the halving, and at that point saw selling pressure. But now what a lot of people might be thinking is they're going to say, well, Josh, are you saying that we're then going to go all the way back to the lows if we don't break above 80 at some point in the next year? And the answer is no. It's very possible that when we get to 80, that we see that the price flattens out, that we're no longer getting these parabolic moves higher, and neither are we getting these monumental sell-offs, because the people that are acquiring Bitcoin are going to want to hold it. And so is the conversation later this year going to be a lot of people just saying, we didn't go as high as everybody thought, but we're not going to drop as low as we have in previous cycles, because those who are holding it, the Michael Saylors, the BlackRock, the State Streets, are truly holding it as long-term investments, and it's come out of the hands of the retail speculators and into the hands of the long-term investment houses. So this price could hold and moderate and stabilize. And so you could see the conservative, smart investors moderately and slowly accumulate for a long time between what I'm going to call 50K and 80K. And then in the course of time, pump it into that stratosphere price that a lot of people expect. And so at the moment, I do not see anything above 80K right now. But here's how we can quickly determine if I'm wrong. I think that we're going to know one way or another pretty soon, because if the month of April ends and we close above 80K, then the theory that we lack momentum to go higher is off the table. Now, the candles are quite interesting. We've had a doji candle in the last couple weeks that represents indecision. I see a hanging man candle Last week's candle was a hanging man candle, which is actually very bearish. The current candle that we have is a bullish engulfing candle. And I would say that we're going to be moving up right now if this week closes with a green candle that's a bullish engulfing candle. I believe that this week and next week, we would see that 80K, right? And that's what I'm seeing at the moment. So let me just take you back in the charts to say this one more time. So this is the candle I'm looking at. Right now, this week that we're in is a green bullish engulfing candle, and the current price is right around 71,600. If we close this week with a price above 71,700, then that will make this a green engulfing candle, and that will make this a bullish candle the week before. But if we drop beneath 69,360, then that makes this last week's candle a hanging man. But honestly, from my point of view, I think we're gonna make this additional push up, and I think that we're gonna have to then find out at this infamous 80K level whether it's going to be an area of momentum rejection, and we begin to then come back and retrace this support level I gave you guys before, which is largely going to be between 45 to 50,000. That's largely the big picture view. Now, the other thing I want to go over with you guys is some of the vulnerable areas of this market and who that shark could be. Who's the shark that's going to take our precious capital as we enter back into the market? Well, I'm going to just go out on a limb today and say that the shark could be Gary Gensler and the SEC. Why do I say that? Because there's a lot of regulation that should have been done in the winter. It should have been done in the last Bitcoin cycle. But all of a sudden, right here, as the market's heating up, as we're getting close to making some big moves in Bitcoin that could potentially be breakout moves, I think that the danger ahead of us is what Gary Gensler and the SEC can do. And let me point out to you one of the things that they're currently working on. Stablecoins, DeFi likely to be the SEC's next targets in US crypto crackdown, Berenguer says. If USD coin is targeted by regulators, the impact on Coinbase revenue could be significant. Why would the revenue of Coinbase be negative and significant? Guys, that's because people are simply not going to be trading because of what the SEC is doing. What this article is about is them cracking down on the stable coins, USDT and USDC, and nobody, and I mean absolutely nobody, is going to want to have all of their money sitting in these stable coins. It's too much of a risk environment, especially if they're facing this type of regulation. And so these are the types of news events which represent that shark right beneath the waters, watching as we get closer and closer to that 80K. That's the story I'm telling today. If you followed me, the momentum seems to favor a final burst up moment to 80, but that's where the danger really lies. And the shark, Gary Gensler, sharpening his teeth right beneath the waters, getting ready to strike at the opportune time. Why do they want to do that? Why not cool Bitcoin down as a mature asset? Smart money is patient, accumulate over time, make sure everybody's got their positions and everything in alignment the way that they want it to. They can always cause the retail market to panic sell. They'll buy it again and push it up again. At the moment, that really does appear to me to be the most likely story, and that's how I'm going to be watching my own money. I'm going to be holding, and I'm even pulling some new money in. As long as Bitcoin's driving higher, I'm going to be putting new money to work. But when we get to that critical level, 78, 79, and 80, that's when we're going to be at the greatest risk at the moment that I see. And I think that everybody needs to be soberly thinking about that level. And here's all that I'm saying. All I'm saying is just be aware that that's an area of danger. Am I saying 80K for sure is the top of Bitcoin 2024, 2025? Absolutely not. That would be lunacy. I don't know that. 80K is the most dangerous price point for Bitcoin in 2024 and 2025. That's the message of this video. I opened up with a very scary shark so that you guys could get a sense of the caution that you should take as you descend capital into the crypto waters. So I've recommended the MEXC account to get access to early crypto, right? There's a lot of projects. I talked about Cock Inu recently. I've talked about some meme coins, Book of Meme. I get those on MEXC, MEXC. But here's what you guys need to be aware. You got to be savvy and smart with all of this. And you guys know that, right? But one of the things MEXC asks you is if you want to share your location when you're first setting up. Every app is asking you to do that right now, and I'm not here giving advice, but I'll tell you that what I'm doing, the answer is always no. You do not need to share your location. Unless it's a travel app, I'm not sharing my location. So it's important that you understand if you're signing up for a MEXC account with the link that I provided in the description of the video so that you can get early access to cryptos before they get to Coinbase, you do not want to share your location. And in addition to that, you use a NORD VPN, right? Both of those are important. It is not illegal for US citizens to buy crypto on MEXC, but the example that I will give you is it's sort of like a lemonade stand. If somebody were to go into downtown New York and they were to set up a lemonade stand, people could come up and buy lemonade. If the police came by, they wouldn't arrest people for buying lemonade. That's not the problem, but they might come and give the guy selling it without a license a ticket and tell him you have to get a license because we don't know if you know how to handle or prepare lemonade correctly. You might have got these poor folks sick. That's the idea behind the NORD VPN and MEXC. MEXC is essentially an unregistered exchange for the United States. They're the largest exchange and the highest liquidity globally for any exchange that does not require a KYC. Having said that, I did my research. I felt that they were a good exchange for me to use, but they're offering early crypto projects to US citizens when the SEC really is trying to stop all crypto projects for the most part, except for Bitcoin and the meme coins. When Gary Gensler has an issue with all crypto, these guys are offering more crypto to US customers. So essentially they run the risk of the SEC coming and saying, you can't do that, right? And so that's why we use the NordVPN router. Hopefully that made sense to you guys. All right, let me wrap up this video with these thoughts. If we're getting into tricky waters and you're into crypto, I'm gonna give you a thought. Now, I cannot give you advice, but I'm gonna share with you a conversation that I had with someone who was talking to me about their crypto portfolio. And the issue that I found with the crypto portfolio that they shared with me is that they had way too many cryptos. As we're getting into a more dangerous environment or a higher risk environment, and anytime something shoots up really high, it becomes higher risk. You can't be in a situation where diversification at this point can work against you. If you need to sell quickly, take profits, and you're in a bunch of different cryptos, it's a lot harder to do that if you become convinced that the market has turned. If you got a ton of cryptos, they're a lot harder to manage and to strategically take profit and to strategically use a stop loss. And so this goes against the idea of diversification. If all your money is in cryptos, right, which I've already told you guys is not an investment grade asset from my point of view, regardless of what Michael Saylor says. Any asset that can drop 70% every 4 years is a very sketchy, non-buy and hold asset. And I think that everybody ought to be able to see that. Most people ought to be able to see that. If you're going to be in the crypto space, and that's one of the reasons why I recently made a video about my top meme coins, you don't want to be holding 19 or 20 meme coins because you're not going to be able to chart them. You're not going to be able to manage your stop losses correctly. They're not all going to hit the high at the exact same time, so you won't take profits well. And so I'm just going to give you guys this thought as we're getting closer to a potentially high risk environment. Look seriously at your best performers, your fastest moving cars, and consider some consolidation. That's my word of wisdom for your crypto investment portfolio today, because you're going to be sober-minded and you're going to be realistic about how effective you can actually manage so many positions. Unless it's across the board a buy and hold account and you have a very high conviction that we're going much higher than 80K, so you got to be right about a number of things. You want to consider looking very realistically about consolidation in your crypto and being in the very best projects overall. Now, I know that my comment section is going to get lit up with people saying, what about ADA? What about Solana? About all these different cryptos that you've talked about. I'm going to tell you guys that, and I've said this before, I've been very consistent about it. As we get closer to 80, I'm going to be looking very soberly about consolidation and profit taking. And then, as I also warned in this video, that shark, You know who I'm talking about. That grizzly Gary shark, right? If he begins to drop bombs on crypto with regulation, I think it absolutely would be enough to cause some troubles. And so I hope this all made sense. We'll do more in the comments section. Thank you. If you made it this far, then don't forget to wrap up this time together with a like and hit that subscribe so you make sure to get the next update. And I'll look forward to talking to more of you guys in the comments section. As always, peace and blessings. Take care.